All right, so now we're on an adjusting entry for unearned revenue. So this is the one that is going to cause a lot of people kind of confusion for multiple different reasons. One reason is that many industries don't have unearned revenue because most industries are going to be collecting revenue at the same point in time as they do the work, such as in a cash register situation, or possibly they're going to be doing the work first and invoicing, such as a law firm or a CPA firm or something like that, a landscaper. But some industries are going to get the money first. And those industries might include, like, newspapers is the classic example, except obviously newspapers are dying these days. And, they were once good, but good riddance to them now because they're just excuses for, like, creepy people to drive around in vans, terrorizing children, acting like they're throwing newspapers at people's houses. It's no good. It's no good. But anyway, then you've got the magazines, and then you've got, like, online applications now with a subscription model, in which case you get paid before you provide the work. So on an accrual-based method, you shouldn't be recording the revenue even though you got the cash before you did the work. If you're in some kind of entertainment field like concerts, you're going to get paid before you do the concert. If you get paid and then don't do the concert, then you have to get the money back, or else you're a scammer, man. You're a scammer. So, and then if you're in a rental business, you might get the last month's rent first or something like that, or something similar to a security deposit, in which case it's not revenue, but it should be some type of liability. Now, in a book problem, what happens is when we record the unearned revenue, let's say we're in that old newspaper situation and these crazy people are still buying the newspaper, and so that we can throw it at their house and have that creepy dude. Used to be a kid on a bike, but now you got some creepy old dude in a van driving around throwing papers at people's house and handing out candy to children. It's no good. But anyway, let's say that they ordered that for nostalgia's sake, for it's a tradition. It's a tradition. So they still order the newspaper. And so then when they get the money, when we get the money, if we were selling the newspaper, we would have cash going up, but the other side should then go into unearned revenue because we haven't yet hit their window with the newspaper, thereby earning the money that we get. So that means that we can't record it as revenue. It should be in a liability. And then periodically at the end of the year, what we're going to do is determine how much of the unearned revenue has been earned, and then take it out of unearned because we've broken a few windows at that point, earning our revenue, and put it over here into the revenue side. See, it's newspaper. It's mostly peaceful newspaper delivery. But there's a problem with that, though, and that is in a book problem, they can kind of tell you how much of the unearned revenue has been earned. But in practice, how are we going to determine that? We're going to need a subledger, which is breaking out the information by customer, telling us how much of the unearned revenue has been earned. But unearned revenue is a liability that deals with customers. The problem is that customers are usually dealt with the accounts receivable account having a subledger. So this is an issue we discussed when doing the data input and thinking about this unearned revenue situation when we did the data input, noting there's a few different ways that you can think about doing the data input, and some software has different kind of components to do the data input to try to make this concept a little bit more easy. But the idea from a bookkeeping side is I would like to track everything in a subledger, like one subledger if possible, that deals with the customer, so I can track all of the payments that have been received, but that have not been tied, say, to an invoice, for example. So, for example, in that situation, you might say record a received payment. If I was to look at the subledger over here for accounts receivable, because this is the one that deals with the customers, I would think what I would like to have is an amount that's going to be a negative amount or credit balance to their account when we receive the payment, which I can later create possibly invoices for, applying the payment out and matching them to the invoices, which are gonna record the revenue when they're basically earned. Something like that would be happening. Or in our situation, we were selling guitars. In that case, we had people call in and want a special order of a guitar, but they wanted this ugly color that we didn't have. So we're like, dude, we'll order that for you, but we don't want to get stuck with that in our shop because we don't want it. What are we going to do with it? It's ugly. It's not. But we didn't tell them that. But we're like, you have to give us a down payment in order for us to order that guitar for you. So we make sure that we're not stuck with it. So you're committed, and then we can invoice you. Well, in that case, we're going to get a payment before we do the invoice. So I'd like to do that on the subledger for accounts receivable from a bookkeeping standpoint, because then everything has one subledger for all customers. However, that's not exactly correct from a financial reporting purpose, because it should be on the subledger possibly for unearned revenue. We might need a subledger for unearned revenue. This should be unearned revenue. I won't change it right now, but that's going to lead to more complications, because if it's in unearned revenue, what if we have a subledger for unearned revenue? We're going to have to take it out of that subledger and move it over to accounts receivable when the payments have been received. Some software, like a Xero software, kind of does that for us. It has an automatic process that kind of does that. But even still, it's still more complicated, because that process is doing multiple steps behind the scene to try to do the two things at the same time, meaning record properly unearned revenue as a liability and allow the bookkeeper to easily track that information on the subledger reports. So from a practical standpoint, if you don't have that, some other software like a QuickBooks, for example, might tend towards that later, or more advanced versions might have some of that in there, but it's actually easier sometimes to not do that and just say, I'm going to record a negative receivable. If I record a negative receivable, it's not correct when I record it, but once I do the invoice, it will be easy for me to match out in the subledger reports, and it'll look the cleanest that way. So oftentimes you might set things up that way as long as everybody's on the same page, meaning we on the bookkeeping side are going to say, I'm going to achieve the objective of making things as easy to input as possible, have only one subledger instead of two subledgers, make my subledger so that I can communicate with my customers as easy as possible, and be able to connect the invoice and payment forms if I was using software as easy as possible. And then the accounting department, when I do reporting at the end of the year, then can do the adjusting entry to adjust the accounts receivable to the proper amount and to record the proper amount of liability for those amounts that are still negative receivables per customer. So from a practical standpoint, that's often what ends up happening. We still use the adjusting entry as like a period end adjustment, but in this case, it's not a classical adjusting entry, in that, notice in this case, we don't have a balance sheet and income statement account that's affected. We have two balance sheet accounts. We're gonna adjust the accounts receivable, and the other side's gonna be adjusting the liability. Whereas in the book problem, we imagined that we just keep on collecting revenue, having accounts receivable go up, 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 never recording revenue, and then we determine how much of that revenue has been received. So again, that makes sense from a book problem, but logistically you can see that's kind of a problem in practice, because again, the unearned revenue is you're going to have to determine all of the customers that are tracking the unearned revenue to determine how much of that revenue has been incurred in order to do the adjusting entry that way. Okay, so that's why in practice, you end up with this situation that we're talking about here for unearned revenue, where we have this negative receivable situation. All right, hopefully that makes some sense. All right, so let's